welcome to Blue FX Academy. Welcome you once again. All right, so if this is the first time on this YouTube channel, I want you to hit the subscription button and uh check go back to our previous video. Okay, so I drop more content on how to trade the financial markets. I drop more content like vlogs. I drop content on my forex trading, how I journal trades. I journal trades here on YouTube. I document my trade here also. Okay, and if you'd like to join our mentorship class, you can go into the description of this video, or you can also go to the description of our channel. You can find the links to mentorship and links to join our signal room. Okay, so and in today's video we're going to be talking about top-down analysis. In today's video we're going to be talking about top-down analysis. So this is the second class. This is the second thing, the second class we'll be having. Okay, so our previous class we talked about market structure. So in today's class we'll be talking about top-down analysis, and I would like you to watch this video to the end. Okay, so now when we mean top down analysis, as a trader, as a beginner trader, now this video is for beginners, those who would like to know more about how to do analysis for themselves, those who will be able to generate signals by themselves. Okay, so if you're a beginner here, I want you to stay to the end of this video. So top down analysis. So what do we mean by top down analysis? In trading, before you can do analysis, you have to make sure that you do your top down analysis, because it is so very important. What does top down analysis do? How did top down analysis help? So top down analysis help traders, even beginners traders. It help us to understand the market structure, the time frame we should work on, how the time frame where we are to get entry, the time frame, the market structure, like I've said, the time frame where we are to get entry, and to check how strong the currency pair is, how strong is the trend, because uh each time frame has their own level of momentum. Okay, each trend has their own level of momentum. You can see a very big weak rejection on the daily time frame. By the time you go to the 15-minute time frame, you will see that that week that you are seeing on the daily time frame, if you go to the 15-minute time frame, you see that price sold heavily. So checking the higher time frame really helps a trader to understand what has happened, and what is happening, and what will happen. Okay, checking the higher time frame will help you to understand what has happened, what will happen, and what will happen in the future. Okay, so now let us dive into it. Now, top down analysis. As you can see, the top down is just like going from the top to down. But before we can say you want to understand top down analysis, as a trader, you have to understand the type of trader you want to be. Okay, you have to understand the type of trader you want to be. Now we have four categories of traders that we have. We have the scalpers, we have the day traders, we have the swing traders, we have the position traders, yeah, the position traders or investor. So you have to understand the type of trader you are. And this type of trader we are talking about, they work on different time frame. So like I put here, number one, you have to know your trading personality. You have to know your trading personality. Like I've put here, I said you have to understand your trading personality. You have to know it. The type of trader you want to be, the type of person you want to be. Now, as a scalpers trader, let me explain what a scalpers trader is. The scalper traders, what they do is they work on the lower time frame. They work on the lower time frame. Now, before you can say you want to know how to analyze, make sure that as a trader, to be able to do analysis, you start your analysis with three time frame. Start analysis with three time frames. So you start analysis with three time frames as a trader before you can say you want to do analysis. So you must understand this. Now, this now depends on you. If you want to be a scalper, then you will have to choose three time frame. which will be the lower time frame. If you want to be a day trader, that is, you will have to choose three time frame that you will be working on as a day trader. And if you want to be a swing trader, you have to choose three time frame that you'll be working on. And if you want to be an investor position trader, you have to just make sure you have three time frame that you'll be working on to 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 do your top down analysis. Okay, now we're talking about top down analysis. Now, like I said, a scalper, they work on the lower time frame. And a day trader, what do the day trader do? A day trader do make sure that it takes trade for the whole day, for the whole day. So a day trader does not hold trade for weeks. So they make sure that that same day they make money. Okay, they make sure that they hold trade for hours to make money. But as a swing trader can take trade for weekends. They can hold trade for so long. They can hold trade for 2 weeks, 1 week. Okay, but as a position trader, as an investor, what do? They are looking for a long term uh um profitability. That is what they are looking into. All they just do is to invest their money. And if a stock, if the asset where they invest their money is at the edge of, is at the bullish run, it means that they are going to be making money also. Okay, so you just have to understand that, like I said, you have to make sure you have three time frame where you'll be working on. So now let us dive into the time frames as this trader can work on. The time frame as this trader can work on. So now these are the time frame. As you can see, we have scalpers. Now the time frame as a scalper can work on. A scalper can work. Now we are talking about top down analysis. A scalper can start his or analysis from the 1 hour time frame or 15 minutes time frame. Now if you notice, I said what we are talking about today is top down analysis. You see, top and down analysis. Now, where is the top? The top is the 1 hour time frame. And which one is the lowest time frame here? The lowest time frame is the 1 minute time frame here, right? So that is what we mean top down analysis. That is, do you your analysis from the higher time frame, from the top time frame to the down time frame, which is the lower time frame. Okay, that is what I mean by top-down analysis. Now, as a scalper do make sure they do the analysis from either the 1 hour time frame or they use the 15-minute time frame. Now, after using the 15-minute time frame, then they use the 5 minute time frame and they use their 1 minute time frame for entry. Okay. So as a day trader, is it a day trader can use the daily time frame to start his own analysis, or they use the 4 hour time frame to start their own analysis, and they use the 1 hour time frame also. Then they use the 15 minute and 5 minutes, 15 minute or 5 minutes as entry. Okay, and we'll look at the swing traders. They use the monthly, they use the weekly, the monthly or weekly, and they use the daily time frame and the 4 hours or 1 hour as entry. And the position trader, they are investors. These are the people that are looking into, long term positioning. So they have a long term positioning for them to make money. Okay, so they look at the 1 year time frame, they look at the monthly time frame, they look at the weekly or daily time frame. Okay, so here, the platform I'm currently using is TradingView. The platform I'm currently using is TradingView. So you have to understand this before you can say you want to understand more on market structure, which was our last class, our previous class, because we talked about market structure. Before you can say you want to understand market structure, you have to understand top-down analysis. Okay, top-down analysis. You have to know the interpret. You have to be able to interpret what the higher time frame is saying, and be able to interpret what the lower time frame is saying. So that is the work of top down analysis. The top down analysis helps you to be able to interpret what the higher time frame is saying and what the lower time frame is saying. So in top down analysis, the higher time frame, what the higher time frame does here, it shows you the trend. It shows you the trend. If a trend is bullish, the higher time frame shows you. For example, as a scalper, we said as a scalper they use 1 hour or 15 minutes. They start the analysis from the 1 hour or 15 minutes. Now, if as a scalper wants to trade, let's say today is Monday and a scalper wants to trade, wants to take a trade, the first thing a scalper will do is he will first go to the higher time frame. So he might use the 1 hour time frame. Then the 1 hour time frame that the scalper is using, we let the scalper understand, the trader to understand the trend of the market, the trend of that currency pair he wants to trade, or the trend of the cryptocurrency the person wants to trade. Okay, so once you go to the 1 hour time frame, you'll be able to see your trend, if the trend is bullish or if the trend is bearish. So the 1 hour time frame shows you the trend is what, the trend is bullish. And always remember, never trade against the trend. The trend is your friend. So whenever you check the higher time frame and you see the trend is bullish, whatever you want to do in the market, make sure you find a bullish opportunity. Make sure you find a buy opportunity. I said that in the last class that when the trend, the market structure is bullish, it means that you should look for a buying opportunity. And when market is bearish, you should look for a selling opportunity, right? Okay, so you have to understand that. Now, if you look at the 1 hour time frame or the 15-minute time frame and you see that the market structure is bullish, so your what you should do next is you should have it in your mind that I will not trade against the trend. You have to have it in your mind, I will never trade against the trend. So you have to make sure that whatever the market structure tells you, that is what you should do. If the market structure is bullish, then you should always find a bullish opportunity, a buy opportunity. Okay. And if the market is bearish, you should always find a bearish opportunity. Okay. And the usefulness of using the higher time frame again is it shows you how strong the trend is. It shows you how strong the trend is. Like I told you, like the daily time frame, if you see a big weak rejection, and if you go to the 15-minute time frame, you see that price price literally sold, like massively sold. Okay, so the higher time frame shows you how strong the trend is. Now the next time frame here is 5 minutes time frame. Now this 5 minutes time frame, this is the time frame where the scalper, the trader, will use to mark their zones. And on the 1 hour time frame or 15-minute time frame, they can mark their zones also. So on the 15-minute time frame, they can mark their breakout and support, they can mark out their trend lines, they can mark out their fair value gap, they can mark out a lot of things. Even on the 1 hour time frame, they can mark out all those things on it. Okay. And the 1 minute time frame, they use it as entry. Same things to a day trader. A day trader can start his analysis from the daily time frame or 4 hour time frame. So you have to know the type of trader you are. So I don't want to waste time on this. So I just want to go straight to the chart. But before I go straight to the chart, there is one more thing I want you to understand. So now to the next, I said the trend is your friend. I have said it the other time. The trend is your friend. So never trade against the trend. If the higher time frame is indicating that the market is bullish, never go against the trend. So you have to trade with the trend, because the more you trade with the trend, the more money you make. Okay, if you trade against the trend, it means that you're just looking for a short opportunity. So never trade against the trend, because the trend is your friend. All right, so now let us go to the chart, and let's go to the chart so you're able to understand more on the what we mean by. So this platform I'm currently using is called TradingView. So this TradingView platform is where we do analysis. Is where I do my analysis. Okay, is where you do your analysis, your setup. This is where everything cooked. This is where everything cooked. Okay, so now I am a day trader. I am a day trader, and to trade, what I do is, first thing, I move on to the higher time frame. Now, if I'm a day trader, what do? I can use the 4 hour time frame, or I use the daily time frame. But for this class, I'm going to be starting my analysis using the daily time frame. So it's like I'm going to uh erase all these things. I'm going to erase all those texts. Okay. All right. So all right, let me just clear out this too. All right, I think I should leave that so you can see that the trend is your friend. So this is our chart. This on GBP USD. As you can see, we are currently on GBP USD, that is British pound Japanese yen, and we are currently on the higher time frame, the daily time frame. Now, to do your analysis, we have to know the trend of the market. We have to know what price is currently doing. Don't forget, how do we identify a bullish trend? A bullish trend move like this. They move in higher high, higher low. They break out of this high. They create another higher high, another higher low, another higher high, another higher low. Then they move up like that. Okay. So this is an example of a bullish trend. Now, if I bring out my trend line, you will see that the trend line will match up together with that. So this is an example of an uptrend. Now, what is the trend of this market? Now, as you can see, if I use the higher time frame, if I use the daily time frame, the daily time frame will interpret. And always remember, whenever you want to do analysis, make sure, especially when it comes to doing analysis from the daily time frame as a day trader, just make sure that you focus on just this. Okay, you focus on that part. It's too dark. Okay. Oh, I have to draw another one. Okay. Okay, I found it. Found it. Okay. Yeah, I found it. So I have to change the color to this and the transparency to. Okay, this transparency is okay like this. I have to change the color. Alright, so just change it to this, and the transparency too will be. Alright. So now this is a daily time frame. We have to focus on the daily time frame. As it is, we have a risk rejection right here, and we see a bullish trend. We have a weak rejection right here, and this weak rejection as it is, if you go to the lower time frame, you will see that what price did here, price sold. That is, there is no much movement, there's no much buyer in this market, so there is a much more of sellers. That is the reason why we can find this weak rejection on the daily time frame. Okay, so let me just move to the 4 hour time frame before that. So the 4 hour time frame is where we will know more on our the market structure. Now, always remember that an uptrend, they do break out. an uptrend, they do break out from their highs. Okay, now this is an example of an uptrend. You will see, we'll see a breakout. There is a breakout here. So there is another BOS, a break of structure right here. Okay, and when we look at this two, we'll find the break of structure right here again. Even right here, find a break of structure right there. Okay, so this is it. Break of structure break of structure and break of structure. Now this is an example of a bullish trend on the 4 hour time frame. If you want to identify a bullish trend, you have to first note, you have to first find break of structure in the highs. This is the high. Now let me draw a trend line. This trend line will indicate that we are on a bullish trend. As you can see, price is what on the 4 hour time frame? Price is currently bullish on the 4 hour time frame, right? Price is currently bullish on the 4 hour time frame. Now if I should indicate again, this is the low, this is the high, and price came down again, and a little bit high there, and it came here, then it went up, it break out of this high. Okay, price break out of this high, then it came down again, and it came up right here again. It came up right there. If you can see that this high, this recent high here is higher than this one right here, the one at the left, this one right here. Okay, so price has broken out, then price came again, price break out of this, price break out of this high. Okay, then price do what again? We expect price to do this, and we expect price to move up, anticipate price to do that, break out again, and price to make a retracement again, then price continue doing the same thing, price continue going up. Okay, so this is an example of an uptrend. That is an example of an uptrend. So it is very easy to identify an uptrend. This is what we call top-down analysis. So first, the 4 hour time frame is meant for you to identify the market structure. Now, we already identified our market structure. We already identified that the market structure is bullish as it is shown here. I've already drawn my BOS, the break of structure, break of structure, break of structure, break of structure. So we already identified that. And then there's a trend line also here. So I'm still going to cancel the trend line. I don't need that now. And I'm still going to cancel this too. I don't need that now. Now, as price is currently, as price is currently, the next thing I'm going to do, the next thing I'm going to do, I'm going to mark some zones. I'm going to mark some zones. So now, what are the zone I want to mark? Now, if I'm to look at this, if I'm to look at this place on the 4 hour time frame, I can spot a support zone here. I can spot a support zone here. Here we have a rejection, rejection, another rejection here. Okay, we have multiple rejections. So this is our support on the higher time frame, the 4 hour time frame. We have a rejection. So why did I draw a zone here? Why did I draw my support here? Because when price came here, price went up, and again price did the same thing again. Price came here, price went up again. So what do we expect price to do if price should come back? Now price came back again. What do we expect price to do? We expect price to buy. Okay, so this is our support zone. This is our support area. Okay, now I'm already marking my zones. Never forget that. I'm already marking my zones. So if that is the if this is the support, we have our resistance. Our resistance will be high here. Okay, that is where our resistance will be. So what I'm literally teaching you right now is price action. So you have to understand that before you can move to different strategy you like to learn. So you have to understand price action, pure price action. This is what I'm currently teaching right now. Okay. So now let us move to the 1 hour time frame. Now we are not done yet because we have to make sure we switch from the higher time frame to the lower time frame to get what we are looking for, to get our entries, to understand what price is currently doing. Okay. Now if you can see this also. Okay. All right. So let me just draw this. This is our support. So this must be marked as support. Okay. It's also known as a demand zone. Okay. It's also known as demand zone. These are support. Now, if you notice here also, you see that we are also on a bullish trend. We are also on a bullish trend. So price is currently on support. Whenever, don't forget, whenever price is on a support area, what do we do? Whenever price is on support, what do? We buy. Okay, and whenever price is on resistance, we do what? Whenever price is on resistance, we sell. Okay, never forget that. Whenever price is on support, which is also known as demand, it means we buy. And whenever price is on resistance, which is also known as the supply zone, it means we're going to sell on this on the resistance zone or supply zone. Okay, so now currently we can see we can see what we're talking about. Price came down here and price did what? Price move up and price came down again. Price did not break out. Price didn't break out and price move up again. After price moving up, price broke out of this. Price broke out of this high here. Price broke out of it. Then price moved back again to this same zone. As you can see, price did not break out. Price did not forcefully break out. Can you see? And price created another bullish momentum. It created bullish momentum for a signal, a buy signal on GBP JPY. As you can see, price created, look at this candlestick, a momentum on the 1 hour time frame. It created a bullish momentum. First bullish, second bullish momentum. It means that on this currency pair, we should be looking to buy. Okay, we should be looking to buy. Now, if you want to take your entry, if you want to take your entry, now to take my entry, then I will move to my 15-minute time frame. Never forget that this bullish candle is really indicating is a strong zone. This is a strong buy. I can see it. This is a strong buy. Then I'll move to the 15-minute time frame to take my entry. 15-minute time frame or the 1 hour time frame to take my entry. Now, how do we spot entry? You have to understand ways of taking trades or ways of placing trades. Okay, part of the things that you have to look out for, you have to look out for confluence. Now the confluence number one, don't forget, the confluence number one is we have a bullish momentum on the support zone. So whenever you find bullish momentum on the support zone, it means that we should be expecting more of buy on GBP JPY. We should be expecting more of buy on GBP JPY. Okay, so we are currently on the 1 hour time frame. So this is the first confluence, the first confirmation that it is, yeah, I should look for a buy opportunity in the market. Okay, so we have a bullish momentum, then we'll go to the 15-minute time frame to spot our entry. Now, on the 15-minute time frame, there are different way of spotting entries. As you can see on 15-minute time frame, we can see a pattern. We can see this pattern right here. It moves like this, kind of move like this also, then like this. And what we expect is just like what we are currently seeing here is just like an inverse head and shoulder. Okay, so you just expect price to move like this, then price to move up. So now you can either enter now, or you wait for price to break out of this neck. This is a neck. This is a neck. Can you see that? Currently that I'm showing you, we are on a live chart. This is a neck. So now if I'm to trade currently, we're on the, don't forget, we're on the lower time frame, 15-minute time frame. Now I want to look for an entry. So the time frame you use will depend, we let you know how fast your entry will be. How do I put it that you understand? Okay, in this way, let me just break it down for you. If you use the lower time frame, the lower time frame will give you opportunity of taking early entry. What I mean by early entry means sniper entries, taking sniper entries. Okay, so now if I'm to place my trade, I'm going to place my trade right here. And if you place your trade right here, it means that you are taking an aggressive entry. It means you are taking an aggressive. We have two different type of entry. We have the aggressive entry first, the conservative entry, and the aggressive entry. What do we mean by conservative entry? Conservative entry means you are simply waiting for more confirmation. For example, conservative entry, if I'm to take a conservative entry, I'll wait for price to break out. Once the candlestick break out of this zone, one candlestick break out of this neck, then I will expect price to come here. So once I spot bullish candlestick on this point I'm pointing now, once I spot a two bullish candlestick, then I open on a trade. Okay, I'll just open on a trade. Once I see two bullish candlestick, I will just open on a trade, and I'll put my stop loss right here. I'll put my stop loss at this low. Okay, then I'll set my take profit at the next high. So I will set my take profit at the next high. This is it. Can you see? It's 1 to 2. 1 to 2 sharp. 1 to 2 risk to reward ratio. That is the trade. Okay, so I don't want to take time on this. Okay, and the aggressive part of it, aggressive entry. We're talking about aggressive entry. If you want to take an aggressive, let me just take this away. If you want to take an aggressive entry, you just have to take a trade. If I'm to trade this GBP JPY now, I'm going to take my aggressive entry right here and place my stop loss right here. Can you see that the risk to reward now is now different? But wait, just still hang on. Let me check if it's at TP, is at the high. My take profit is at the high. Can you see we have 1 to 4 risk to reward ratio? You know, when I put my entry at the neckline, when I put my entry at the neckline of this inverse, okay, the network is gone. So kindly wait for the network to be back. So you just have to understand how to take snipers entry. The 15 minutes time frame, the lower time frame helps you to be able to spot entry so fast, to be able to take snipers entry. That is what the 15-minute time frame does. So that is what the 15-minute time frame does. So you just have to understand that. Okay, network is back. So I'll just have to put my stop loss here. This is my stop loss. The stop loss is at the low right here. So I'm currently on a trade. And now you have to remember we have different type of patterns. We have the head and shoulders pattern, W pattern. Now let me just show you what I'm talking about. Price action, price action, price action patterns. All right, so I was literally thinking of showing you something on Google, but I can't. I don't know why it's not working. I want to show you something on the Chrome browser. I don't know why it's not. Okay, so let me just continue. So price action patterns. Now, what I found here is an head and shoulder. Now, inverse head and shoulder. This is how it is. Inverse head and shoulder. These are patterns that you as a beginner, you can find in the market. You just expect price to come back here, then price to break out of this neckline. This is a neckline. This two eye is the neckline. So price should just break out of it, then price should uh come back again to retest for a pullback of these pullback of those eyes. Then after price pullback, then you should expect a buy. Okay, so this is an example of inverse head and shoulder. There's the shoulders. These are the shoulders, these two here, and this is the head right here. Okay, this is an inverse head and shoulder. This is an inverse head and shoulder. And for the head and shoulder, we have this is it head and shoulder, and we have a W pattern, also double bottom, double top, and so on and so forth. So right here, this is a head and shoulder. This is the head and shoulder. These are the shoulders, these two shoulders, and this is the head. This is the neckline. What do we expect? Now, this head and shoulder, we can find it uh on the on the bearish on the bearish side. Okay. Let's assume that price is bearish, currently bearish. All you just need is you just wait for a breakout. Once price break out of this neckline, you wait for a pullback right here. Once there is a pullback, then you look for your entry. You enter a trade. Once you find like two strong bullish candlestick, then you enter for a buy. Okay, so this is a head and shoulder. You mostly find this on the bearish market. Okay, but this inverse here, we find it on the uh okay, sorry, this inverse head and shoulder right here, you can actually find it to take entry to go bullish, while the head and shoulder, you can actually find it when the price is an uptrend. You can actually use it to take entry to go bearish. Okay, I hope you get that. So I don't want to waste time. So this is it about the uptrend. So now I have taken my entries. As you can see, risking 1 to 4 risk to reward ratio on this trade. So the next thing is I want to move to the downtrend. How to identify the downtrend? This is a bullish trend. How to identify a downtrend? Still loading. The network is gone. So let us look at another currency pair. Let us look at NZD. Okay, NZD card. Let's look at NZD card. If we can find anything on NZD card. All right, the network is very slow. Okay, this is NZD card. All right. So we want to use a bearish market for example. So remember, as a day trader, you have to make sure you make use of your time frames, your three time frames. They really matters a lot. It really matters a lot. Okay. So now on the daily time frame, price is currently showing a bearish momentum. Price is currently bearish. So how do I even know price is currently bearish right now? How do I know price is currently bearish? If I have to check here, you see this. You can see this. Yeah, price is currently bearish right now. Okay, let me just put that there. So price is currently bearish right now. As you can see, what did price do on the daily time frame? Price drop. So we'll be looking at this side. We'll be looking at this only just this point that we are. Let me just mark those where we are looking at. So that is where we are looking at. That's where we are looking at. So this side also really matters, but to understand more better, you have to make sure that you focus on since we're on the daily time frame. Since we're on the daily time frame, so let me go to the 4 hour time frame. You understand more on this. On the 4 hour time frame, we discover that prices you discover that price is currently bearish. This is it right here. On the 4 hour time frame, price was bullish on the 4 hour time frame, and unfortunately, price went down, going bearish. Can you see? Price going down, going bearish. Now, what do we do? Now that we're on the 4 hour time frame, what do we do? On the 4 hour time frame, we have to spot our zones. The zone we're talking about can be your support and resistance, it can be your trend lines. That is what you need to do. You have to spot those zones because they're really very important. They're really very important. Okay, so now I spot something right here. I spot like a support zone right here. I spot my support zone right there. I spot a support zone, and we just use this as a resistance. Okay, gonna use that as a resistance. So now, what do we expect? Since we're on a bearish trend, if you want to take a trade, now if you want to trade it, if you want to take a trade as a trader, if you want to take a trade, what I mostly advise is that you should always make sure you wait for price to get to our zone. You should always expect price to get to this support. Since we're on a trend line, since we're on a downtrend, what do? We look for a selling opportunity, right? But since we already have a zone, we already have a support zone here. We expect price to do what? We expect price to come down here, then you know price should continue turn into a bullish trend, and come back to this resistance zone. And whatever price wants to do, price might come back down. Okay, so let me just price might come down again and do can do this, or price should continue buying. Okay, anything can happen in the market. So just understand that anything can happen in the market because we are just the retail traders. Now we have multiple rejection: rejection one, rejection two, rejection three, rejection four. This is the fourth rejection. Don't forget we're still on the 4 hour time frame. And what the price do here, we have a support zone which is also known as demand zone. Okay, and remember that we still have to go to the 1 hour time frame. Okay, you still have to go to the 1 hour time frame. The reason why I'm using the daily time frame is just to understand more on the you should understand if you is if it is the daily time frame you want to use or the 4 hour time frame you want to use. Okay, in the aspect of those that want to just start their analysis from the 4 hour time frame, this is what you should do. Okay, so if you want to start your analysis from the 4 hour time frame, this is what you should do. As you can see, we already found our zone. This is support zone, and the market currently is what is currently bearish. Now it's currently bearish. If you go to the 1 hour time frame, you will see that market is the price of on NZD card is bearish on the 1 hour time frame. Okay, still loading. All right, the network is not back yet. So don't forget this is live trade. So if you currently watching to this part, I want you to hit the subscription button and like this video. And if you have any question in mind, you can drop it in the comment section. Okay, you can drop your question, you can drop them in the comment section. And yeah, and if you like me to make video, anything you would like me to make video on in the market about the financial market, about the forex market. Okay, so network is back. So as you can see on the 1 hour time frame, price is currently bullish. Price is currently bearish. Price dropped, right? Price dropped. Okay. So now you have to understand. I've said it on the 4 hour time frame that what I should be expecting if I'm to trade, I'm going to be expecting price to come here. Once price come to the support zone, then I'll be looking to buy. Okay. Once price come to the support zone, I'll be looking to buy. That one, it costs patience for you to just wait because it might take the whole day for price to get back here. It might even take 2 days or 3 days for price to get back here. Okay, depend on what market really wants to do that day. It depends on the condition and the movement of markets for that day. Okay, all right, so if I'm just to trade, i'm going to be waiting for a bullish I'm going to be waiting for back price to come back here to our support, then look for just find a low. Where is the low? Our low is currently there. Okay, then what will be our next take profit? Let this be our take profit. This can be our first take profit. Can you see this is 1 to 2 to reward ratio? This trade is 1 to 2 risk to reward ratio. Okay, so this is what we have on the 1 hour time frame. This one really looks clear on the 1 hour time frame. Let me just take this. Let me delete this. I think I'm already making this video so very long. I'm already making this video so very long. So we end the videos. I will end it soon here. Okay, so now as it is right here, now when I talk about confluence, how to find confluence, how to find confirmation before you can enter trade. Now if I'm to take trade, if I'm to enter my trade, if I'm to enter trade on this NZD card, what I'm going to do is I'm going to wait for price. I'm going to wait for price to get back here. So I'll wait for price to get back here. Once price gets back here, I'll wait for the candlestick. Is it that price liquidates downward and price come here again and create like a W pattern, something like this, and price did this. So immediately I see this hand, immediately I see a bullish candlestick that is like this, a strong bullish candlestick, a strong bullish candle that is like this, I will just open on a trade straight away. That is if I want to take a manual, if I want to take a manual entry, I just take my trade just like that and put my stop loss below this. Then I'll put my target the same place. Okay, put my target the same place, but the risk to reward ratio will be different. Can you see? This one is 4x to 5. Now the first one is what? I said we have different type of entry. We have the aggressive entry, we have the conservative entry. Conservative entry is when you are waiting for more confirmation before you enter trade. But aggressive entry is when you are not even when you are confused, when you are convinced that okay, once price gets here, since it's a strong zone, once price gets here, you can just put your pending orders should be here and set your stop loss at the right place. Then once price just gets here, you expect price to do what? Trigger you in. Okay, so that is it. That is it about that. The network is gone again. Okay, wait for the network back again. It's just going and coming, going and coming. All right, so you have to understand how to take entries from the 15-minute time frame. You have to make sure you find how to take entries from the 15-minute time frame or the 5-minute time frame. So if you want to take entry, that's what we call chart pattern. Chart pattern are basically like finding your head and shoulders, your W pattern, which is double bottom or double top. Okay, double bottom or double top. I think the network is not back here. I don't know what is wrong with this network. Going and coming. We just have to wait for this network to be back. So if you're really enjoying this video, I want you to hit the subscription button and like this video. And don't forget to subscribe. Don't forget to subscribe. Guys, I'll be dropping more content like this. Don't forget, this is just like a beginner class for beginners. Okay, if you want to start learning how to do analysis by yourself, so this is for you. This video is for you. Okay, all right, so this is it. I'll just wait. So once price gets to this point, what do? I will move to the lower time frame. Once price get to my zone, my point of entry, I'll move to the lower time frame, which is the 15 minutes time frame, to spot a W pattern, or a W pattern like this. Then I'll take my entry. Okay, to form a W pattern, or you find this in the market. At times that you find this just like a V shape, like a V shape. You can also use this as a conference to enter trade. Okay, you can find a V shape like this. You can use this to enter trade. And thirdly, you can use market shifts, what is it called? Uh, Breakout and retest. Where is our eye? This is our eye. Okay, this is our this is the eye here. This is the eye. So what do I just do is just expect price to move up a little bit. So just expect price to move up a little bit, and then we wait for a retracement back here. Then the next thing you should expect a boom to the top side. You expect an entry to the top side. Now, the more you wait, is the more your risk to reward ratio will be will get cut short. Okay, that is, if you want to take the earlier the lower the time frame is, the better the risk to reward ratio. If you use the 5 minute time frame, it means that you're going to be getting a good risk to reward ratio. And if you use the 15 minute time frame, it means you are going to be getting a good risk to reward ratio. So that is it about that. All right, so if you really find this video so very helpful, we'll be stopping here for this class today right here. Okay, so in the next class we're going to be talking more on how to how to trade the uptrend, downtrend. Okay, strategies and approaches to trade uptrend and downtrend. All right, so that is it, guys. Thank you for watching. I want you to hit the subscription button, like this video, and share the link to friends.